Wouldn't it be nice if there was an easy way to manage your money and get professional advice and yet low cost to get that all done? And it's easier said than done because it's taken a long time to get here. Michael Katchen joins us, though. He's the founder and chief executive officer of Wealthsimple. What is Wealthsimple?
Yeah, it's really simple, actually, Pat. We are a technology-driven investment manager. So what we do is we build clients a fully diversified portfolio of low-cost index funds. We monitor it every day and rebalance it automatically. And we do it at one of the lowest fees in Canada.
Okay. And this is all online?
This is all based online. So every client does get a dedicated wealth concierge, which is your wealth advisor professional that you can access via email or phone or video chat, that sort of thing. But you sign up online.
You can actually talk to a person, so it's not like a robocall or something like that.
No, we actually hate the term robo-advisor. It's caught on for some reason.
Yeah.
But every client gets a dedicated advisor. And that part of the service component to our business is really important to what we're offering.
Okay. Usually when you get service like that, it costs a lot of money in terms of the fees. You're saying, no, that's not the case. But also the amount of money that you have to give the person to get that advice. What's your case?
Yeah, we are wholeheartedly committed to making this type of investing accessible to everybody in Canada. So because we're a technology company, we're able to deliver this service at a fraction of the cost. So our costs are 35 to 50 basis points. So that's 0.35 to 0.5% management fee per year.
So 0.5% tops.
That's right. And that compares to 1.5% in the industry. Most Canadians are actually paying 2.5% for mutual funds. And our account minimums are just $5,000. That compares to what's typically $250,000 or even $500,000 at a typical advisor.
Wow, so you're spreading it out to these have taken off, I know, in the States.
That's right.
What do you think is the appeal in the States in particular, and then why is it taking so long to get to Canada?
It's a great question. I think the appeal is people are frustrated with the fees and the performance that they've seen in their investment advisors over the last 10 years. We've been through two major market cycles. They want a low fee, totally transparent way to invest, and that's one of the things we can do with technology. We're totally transparent on performance. So when you log into your account on Wealthsimple, for instance, you see four numbers. You see how much you put in, how much you're up, what you paid in fees, and the arithmetic of those three numbers gives you what your balance is today. I mean, that type of transparency just hasn't been possible before. And the second that, why it hasn't come to Canada, we like to think because we haven't been here yet. But this type of technology is fairly new, so we're bringing that here for the first time.
Well, there are other services like this being introduced. You're going to be in Ontario and British Columbia, I think.
That's right. We're now live in Ontario and British Columbia.
Okay, and you're expanding to the rest of the country?
Yes.
At some point in the future?
We hope within the next month, so very soon.
But there's other competitors out there, Nest and WealthBar and other ones that are in this country. They've been here for a year and they haven't expanded, you know, as much as you're forecasting you might be able to. What's your advantage over them?
Yeah, I think that's a good question. You know, we really don't look at them as competitors in this space. We like to think about our competitors are really the incumbents with the high fees and account minimums. But one of the things that sets us apart is our technology background and our team of industry experts. So we have a phenomenal team of veterans behind this business, like Joe Canavan, who's the former CEO of Asante Wealth Management, you know, was awarded the Person of Influence of the Decade in Canadian financial services. We have Brent Belsberg. We have Roger Martin. So a real team of industry veterans behind the business. Match that with world-class technology software engineers that come from Silicon Valley. So my background is technology. I was living in San Francisco for the last few years where I built and sold a startup down there. And I've managed to convince half the technology team to move up here to Canada to help us with this. And that lets us move really fast.
I want to talk about that more. We have to take a really quick break. We'll be right back, though, to discuss this Wealthsimple. Michael Katchen still here from Wealthsimple. And Michael, you know, you told us a little bit about your background as being a tech kind of a guy. And were you in the process of developing algorithms for wealth management? What got you interested in money and managing money?
So I have always been interested in investing. In fact, I won my first stock picking competition at 12 years old. And I think for some reason I've always been interested in investment management. And when I graduated school, I actually worked at a big consulting firm called McKinsey in their financial services practice here in Canada, working for banks and pension funds. And so I've always wanted to do something in this space. And I've managed to, you know, marry my passion for technology with a world-class team of folks from the finance industry. I didn't mention, but our head of our investment committee is actually Professor Eric Kerzner, who's probably the godfather of ETF investing, right? He built the first ETF, was part of the team that built the first ETF 30 or 40 years ago in the world. And it's just a wonderful, wonderful expert to have on the team.
Okay, so why focus only on ETFs? Within the context of Wealthsimple, can you buy mutual funds? Can you buy individual stocks?
So actually, part of the portfolio is ETFs. Part of it is mutual funds. The reason ETFs is they're low cost and super liquid, so it's a wonderful investment vehicle for the average investor looking for a long-term solution. We don't do any stock picking. I mean, the data is very clear that it's very hard to be a consistently good stock picker over the long term.
Although you are, by your own description, you said. Do you remember the stock you picked at 12 years old?
I sure do, and it's a funny story. So it was MGI Software. And it was just before the stock market crash of the tech bubble. And that actually taught me a big lesson about what it means to be a stock picker and why index investing is a really good, solid way to invest for the long term.
Okay, back to the reasons why you don't pick, where you're limited, I guess you would say, in terms of your stock picks overall. What are you targeting in terms of who should be using this kind of a product?
Yeah, I'd say if you're someone that's frustrated with the advice you're getting today, if you're frustrated with the fees that you're paying, we are a wonderful solution for a long-term investment advisor. We already have a very broad group of clients on our platform today. Everybody from the young 25-year-old professional who's just starting to save for the first time to someone going into retirement that has quite a large nest egg that's just looking for a lower cost, sophisticated solution to manage their wealth.
And part of managing wealth is things like insurance too, and real financial planning will customize things to the individual. Do you do that?
So we certainly do customization. So big part of the process up front is you take a risk assessment and discuss those results with that dedicated advisor I mentioned earlier. Then we customize the portfolio to meet your long-term investing needs and goals. On the insurance side, we're working towards offering a broader financial planning service in the future. Right now we are focused on the investment side, but we do offer advice when it comes to insurance. We don't actually sell insurance products though.
How are you going to measure whether you're successful or not? Like, it's one thing to say, I'm going to put this out there, I'm going to hang my shingle, but how do you know whether you've done a good job?
I think there are a few ways. One is ultimately performance. We're in the business of making our clients money, and we're confident that our solution is the best product in Canada for that. Mm-hmm. Two is our clients' reaction. The response so far has been overwhelmingly positive. And when people come to us and are so appreciative of the transparency and the low fees and the solution that we're building, that keeps us going and gets us excited to come into work every morning.
What about the traditional brokerage firms? They can't be happy that you're showing up. You're going to take some business away from them.
You know what? It's a massive market here in Canada. We think that there's a place for lots of different players, even though what a lot of folks are doing is they're handing us 80% of their portfolio, they're keeping 20% back because they still want to be investing in individual stocks and playing the market. And that's a really good solution for people. So long as you're putting the bulk of your nest egg in a long-term solution, go have fun with a small piece of your portfolio.
You've had experience having fun, Michael. Where are you invested right now?
So Wealthsimple. In fact, all of my assets are in Wealthsimple today.
Are they?
Yeah, and the team too.
Well, thanks for coming in and telling us the story and laying out the landscape for this business.
Well, thanks so much for having me.
Michael Katchen joining us, the founder and chief executive officer of Wealthsimple.